Today, we're going to talk about one of the biggest gaps that exists in financial planning, and that's the difference between a good strategy and a good strategy that actually gets executed. Because a lot of advisors can make something that looks good on paper, but can they actually pull through all of those strategies to completion so you get the benefit that's on paper?
Yep. Today we're going to talk about proactive planning and are you really getting proactive planning or, is your advisor just saying, "Hey, we're being proactive," but really, maybe they are, maybe they aren't, but how is that displayed?
Yep. So we'll get into the mechanics of what good proactive planning actually looks like and how you can determine if you're getting the full value of the real execution of your strategy. My name is Ben, and I'm a CRPS.
I'm Allison and I'm a CFP, and this is the Abundance Mindset.
Well, it's early August as we record this, and it's been a couple of months since we've actually been in the podcast studio. We took a vacation in there. We had a new employee start, shout out Jamie, and we have been making a lot of financial plans, which is great for the podcast because it gives me a lot of things that I get worked up to talk about.
Yes. Yep. Topic generation. But it is so odd that we are so busy in the business this summer. I've been telling my friends and family it's usually the J months that people don't want to talk to us or new clients don't want to come on board. They want to spend money and enjoy and go out on the boat but this has been a really irregular summer. We've been really busy. So yeah, good problems. Just typically we plan our vacations around the J months.
Yeah, usually it's the most motivated, most hardcore people that are doing anything significant in June and July. And lo and behold, we have several hardcore motivated people that we've been onboarding over the last several weeks. So great for Jamie. It's been trial by fire, if you will. I'm like, Jamie, I promise it's not usually like this. And she's like, okay.
Yeah, well, we thought we'd bring on a new employee during a slow time, but anyhow, surprise, surprise. These are good problems. It's been a blessing.
Yep, 100%. So today we're talking about something that I do get worked up about, I'm passionate about, and that's the translation of strategy on paper into a actual result for a client. I think it is common in our industry to see something that looks good on paper, but then the systems and processes and just attention to detail and proactivity doesn't exist to give the clients the actual value there. So I think a myth to bust as we start this episode is that, maybe you've had a financial plan done before, and you go through this exercise, you have a meeting, you receive some kind of deliverable or set of deliverables, and you're like, okay, great, like I've got a plan. The problem is that your life is dynamic and it starts changing immediately following the plan delivery.
Yeah, I think it's especially when I think about our own process and what we deliver for proactive planning. There's a series of onboarding meetings. There's a series of just getting the right information, which is 20 plus documents from the client, at minimum. And then also when we do the plan delivery meeting, there's, I would say, close to 15 plus documents that they get from us, that are and a few specific ones that are really clear and crisp of, hey, here are the areas where we can be more efficient and how we're going to do it and the date we're going to complete it by. And then, so that's this initial proactive planning. And then, okay, now we're a client. How do we make sure that we continue proactive planning? I think that's what we're talking about today. And that's the differentiator between, someone's experience where maybe they're with an advisor and they have an investment account and they meet once a year. But that's not what we consider proactive planning.
I think I'll preface too and say a plan is good. It's good to have a plan, but we need to acknowledge that a plan becomes increasingly stale the longer it goes unrefreshed, right? And I even think it's quite common actually in our planning process for people to have significant life changes hit either right before we deliver the plan or right afterwards, right? A big equity grant, their startup gets acquired, they just simply get a raise, right? And then it's like, well, if we don't incorporate that into the plan, you're already acting on old information. So today is all about how do we make sure that new information meets old plan and plan gets updated and continues to work efficiently for you.
So in trying to describe our process a little bit, we essentially build a service calendar and a cadence around a client's life. So we make sure that we hit all of the big financial planning topics, but then we're also tracking specific life events that we know, the client is also planning in their life.
Absolutely. And that cadence essentially needs structure, right? I think there's two parts. There's a bespoke, hey, here you are as a unique individual with action items that we're tracking, and we need to stay accountable on both sides to those action items. And then secondly, there's what I would just call good topical financial planning that generally runs an annual. Some more niche topics might only need to be hit every 2 or 3 years, but there's kind of a cycle of no matter who you are, this topic is relevant to you, and we will apply this general topic to your specific circumstances. So I see proactive planning really in two pieces, right? There's bidirectional accountability, and then there's applying sort of an evergreen calendar of relevant things to your life to make sure that your plan does stay optimized to those things.
Yeah, and to try to give some color, a lot of times in the beginning of the year, we're meeting and saying, hey, here's the strategy for this year. How did last year go? Let's look at the tax return. Let's make sure everything went according to plan. Okay, now this year, here's the strategy. Oh, and I want to make sure that you save, a certain amount of cash for the end of the year because we're looking at these moves. Okay, so nothing's a surprise. We're setting the stage. And then as we get into the year more, it can be different bonuses or equity compensation or updates, even in someone's life that we make adjustments throughout the year. And then we have this is more on the service calendar side, but we actively, maintain certain documents and statements that are just going to be new and refreshed each year, whether that's, a 401k statement or even the investment funds inside of there. Did they add any new ones? So there's basic maintenance on the back end of this or getting pay stubs or tax returns, right? That's happening alongside whether we're talking to the client or we're not, we're actively or proactively planning for them throughout the year. And then as we close out the year, we get into a lot of end of year moves like should we do a backdoor Roth? Should we do a Roth conversion? Like we talked about in the strategy meeting, do we need to adjust any stock sale strategies? Or, so and this has to do with ironing out their income, their bonuses, their RSUs. And so we've done a lot throughout the year, especially with people who have RSUs, any kind of equity compensation for that matter. But as we close out the end of the year, we're getting more into executing some of the strategy that we talked about in the beginning of the year if we haven't already.
Right. Yeah. And as you're describing that, I'm thinking of what a skeptic might say. And it could be something like, wow, that sounds like you're grabbing a lot of information and lots of checking, but like what results come from that? And I think like two thoughts on that. First, you never know what you don't know until you check. I think of a time that a client's 401k had after tax added, and we wouldn't have known if we hadn't checked. But after tax, as we've talked about extensively in other episodes, is a huge retirement savings bucket that we otherwise wouldn't have even been able to evaluate for that client. So never underestimate the value of checking. And then second thought, I think it's sexy when you do something, right? But strategically not doing something is just as valuable, because if there's strategy behind inaction, that's just as valuable as strategy behind action. A good example of this would be evaluating Roth conversions. Last year, we had a client who was projected to be a good year for converting to Roth. We did some end of year analysis and found that she was edging up into a higher capital gains tax bracket, meaning that any conversion that she had would actually affect that tax bracket and therefore make it inefficient. So it became a very strategic point of inaction for us to not perform that conversion this year. So you don't get either strategic action and inaction, or finding icebergs in your plan that you wouldn't know about if you aren't doing this iterative work to make sure that everything is updated for a client.
Yeah, I mean, there's so many things that could happen. Your income goes up. Okay, do we need to adjust if we're doing pre-tax or Roth in your 401k? Do we need to adjust your contributions so you don't max out early? Or even sometimes people have lost the match because they maxed out early because the employer was only matching a contribution, not, like throughout the year. And so there's so many things. Or it's really when people get into equity compensation, which is, one of the most proactive things that we do, that's when okay, well, something as simple as your income went up. Now we need to adjust your withholdings on your RSUs. So there's a slew of things. It's hard to, you know, describe and list all the strategies and then reactions that we have to changes, financial changes, and that's just because it's the essence of planning.
Yes, 100%. And I think an important piece within this is that we do have windows of opportunity for action. And big picture, a lot of this is governed by the IRS, the tax season, right? So you only have up into certain dates to make moves that are going to apply to your tax year, right? Sometimes you've got extensions to April 15th. Sometimes you've got extensions to the corporate deadline of the next year. Sometimes you've just got till 12/31 of the current year, like in the example of Roth conversion. So not only do we need to make sure we take action, but we need to not miss the window, and that's where timeliness is critical.
A lot happens at the beginning of a year, after your tax return, and at the end of the year. Those are three big pillars that we center our service calendar around. Because then we're having the quickest reaction time, and the ability to then be proactive with someone's financial plan.
At Abundance, we often work with high earning professionals or business owners whose lives are just becoming increasingly complex and they know that they need some help. As we're talking about this, if you are listening, maybe you currently have an advisor and you're thinking, man, my life is getting complex such that I feel like I need some of these things that we're talking about. It's really common for us to meet somebody who currently has a financial advisor and just has graduated to a different level of need. So if that's you and you're interested in learning more about what we do and how that might apply to your circumstances, you can feel free to reach out via our website at abundancewm.com. And we offer 60-minute complimentary strategy assessments to see if there's a fit.
Okay, so we want to show you what an example deliverable, kind of stripped down proactive planning deliverable looks like. So again, we send out 3 of these throughout the year, and it's, a compilation of a couple different things, what we've done, us, our team, so that the client can see, the back end of, okay, what are they doing on my behalf, right? And just making sure that value is displayed, but then also, what are we doing looking forward throughout the year?
Right, right. So yeah, if you are watching on YouTube, you can see on the screen. So effectively, the top half is what's been done. If you are like most normal people, it's hard to remember what's occurred in your kind of rolling 12 months of financial history. So we call it that, summarize it, and this is really like your executive dashboard of like, hey, what are the things that we accomplished? So rather than you like waking up at 2 a.m. wondering if your taxes were efficient last year, like, you can just check this and be like, oh, right, we did that Roth conversion, and and they looked at my tax return. So it's serving you to remember what has been done. And then, yes, like you were mentioning, Allison, next section in the middle, kind of in that orange, is looking forward. So these are things that we want top of mind for us as well as the client. So we've got some general timeframes attached, right? Sometimes things are near term or as soon as we can. Sometimes things are more, how do I say it? Sometimes actions are more gated, meaning like, oh, when your job changes, when you have your baby, when you move to your new home, then we will do these things. And then we've got some longer term actions as well. And then finally at the bottom, we're looking at goals. So those tend to be relatively stable, right? Our big goals in life don't change super frequently, but these are things that we're always going to review in an early year strategy meeting to say, okay, here's what happened last year. Here's what we accomplished. Here's what we see looking forward. Are our goals changing such that we might want to amend strategy to make sure that we're tracking toward those goals? So really this first page is kind of what I mean when I say like a bidirectional accountability mechanism. It keeps us marching on the same path and keeps us aligned on what's been done, what's upcoming, and why we're doing those things.
So that's the first page. This is a 2-page document. The second page is basically a dashboard for contributions and distributions.
Yeah, and originally when we built this, we didn't actually love this page initially, but we started to get feedback from clients that they really like seeing like, oh, what's my current, for contributors, right? What's my current contribution plan? For distributors, oh, where am I drawing my retirement paycheck from? And this is something that is valuable not just for the client to kind of have that snapshot updated view of where's my money going, where is it coming from? But secondly, we found it really, really useful for ourselves because in the process of keeping those numbers really fresh, it's a big part of proactive We're making sure that we are being maximally efficient. We're we're not missing maxing a 401k contribution by $1,000. We're not filling up an HSA, right? So because we're tracking this for clients, we are staying really fresh and making sure that they're being just maximally efficient for what their plan needs, contributions or distributions.
Mm-hmm. Yep. Yep. And so this is a really clean deliverable, very clear. What's been done? What do we need to do? What are we tracking in our savings rate? And so this is something where the client gets this 3 times a year, and it's working bidirectionally with their living, breathing Right Capital software, which is a different thing, where they can link accounts and, whatnot, which is a software that we use typically when we're meeting and we can illustrate, hey, here are these goals in action. Let's look at a retirement projection. Let's look at, a big goal, a cabin purchase. How do all these different things affect the plan? So that's where we get a little bit more personal as we've already overlaid these strategies. The paper is to say, what are these strategies?
Yeah, well said. I think what we're really getting at here is like a lot of the stuff in this episode is not financial planning strategy. We spent a lot of time talking about strategy. The point here is that strategy is meaningless without execution, right? So you need to be operating your business such that you can execute on the strategy you create. You could have the best, smartest financial planner in the world, but if the stuff that they say doesn't lead to execution, not just immediately, but over time, critically, you're not getting value.
Yeah, and I think this is where it's hard to know what value is or should be as a client. And so the questions you can start to ask yourself are, is my advisor coming to me throughout the year bringing strategy? Is my advisor, active in this relationship or not?
Right. Yeah, and we've talked about this concept in other episodes too, but like who's the project manager of your financial life? Is it you who's kind of saying, okay, like I've got this thought, this idea, okay, I'll double check it against my finance person? Or is your finance person coming to you and saying, hey, I was thinking about this for you. Could you give me a recent, 401k statement and pay stub? I want to double check to make sure this makes sense for you this year, right? Those are two very different realities, but frankly, a lot of people live in reality number one.
Yep, I remember bringing on a client a couple years ago, and she was asking me, all these questions in our intro meeting of like all these strategies that she's been researching, and she said she'd bring them to her advisor, um, but not really get much back. And so, just once a year meeting, here's how your investment performed. But she wanted to know about backdoor Ross, and she wanted to know, about so many other things. And I said that should be a part of the conversation, if not the crux of it. And so, especially when you started getting into tax planning, right? And so I just think of her when I think of, how you're illustrating that, because this just happens in real life, we see. And so are you bringing more to the table, or is the advisor bringing more to the table and helping, guide and coach and work as a teammate alongside of your personal goals to make the financial planning match and work just as hard?
Yeah. Yep. 100%. So these are good questions to ask yourself. And if you're thinking about them, and like I mentioned earlier, if you're saying, hey, man, I am the project manager with my financial planner, and things are getting complex, and I struggle to keep it all straight. And I hope not, but maybe you've found or are afraid that there's been a mistake or a miss. That happens frequently, unfortunately. These are all signs that a change would be in order. And so, like we mentioned before, you can book a 60-minute strategy session with us by reaching out via our website. We hold those complimentary. And we're really here. And the reason we put this information out is because we want to level up as many people as we can, help them make efficient moves, and ultimately help them meet their goals through those efficient moves.
Yep. And even if it's not with us, we can refer you to other planners we know do proactive planning. We just want people to get actual proactive planning because that means someone else is taking an active role, and that's what you're paying for. So you want to get what you're paying for.
We hope you enjoyed this episode of the Abundance Mindset Podcast. We'll see you next time.